Thank you for coming to the seminar and welcome. Today we're going to be talking about art and ecological land and why, because there are a couple of great tax results for some donations of art and ecological land, so that's why they're twinned together. We're doing this because PearTree sent out a questionnaire to the audience asking what type of topics would you like for seminars, and there was a significant enough group that asked for this particular topic, not significant enough to do a live seminar, but significant enough to have this topic. So here we are. So in looking at art and ecology, let's look at the normal rules before looking at the fancy things to start with. So art and land are basically capital property for the most part. It doesn't have to be capital property. Capital property is what I would have as capital property, just property that I own. Inventory is a little different. That's if I'm in the business of producing art, then if I have art, that would be inventory to me. Or if I'm a land trader and I that's my business is to sell land and buy land and sell land. That's all I do. Then that would be inventory for that person. But here we're talking about, for the most part, capital property, people donating art that they own, perhaps land that they've had in the family for a long time, and what happens. So in the Income Tax Act, there's if you donate art or land, capital property, it's a gift of non-cash. So therefore, you have to get a valuation for it to get a receipt for that. So there's a valuation done of the art, of the land, and that determines, okay, this is worth $500,000. When you gift it to the charity, you are deemed to dispose of the land or art for the value of that of the receipt, I guess, $500,000. And do you have a cost base? What did the land cost you? What did the art cost you? That would be your cost base. And then the difference between the two would be a gain. So you would have a capital gain, presumably. Capital gain today, 50% is taxable. And so if you the art was worth $500,000, it cost you $100,000. That's a $400,000 gain. $200,000 is taxable, shown on your tax return. And $500,000 is a receipt. And you can use the receipt, of course, against that income and other income. And that's all good. So that's a normal treatment. Are there any other little things that you can adjust for this? A bit in art. There is, art is, it's called part of personal property. My furniture, my pieces of art. And they deem you to have, for your personal property, a cost of $1,000 and a selling price of $1,000. This takes out all kinds of small little gains and whatever. So if the art costs me $200 and the receipt is $3,000, because that's the value, then my cost is $1,000. It's deemed to be at least $1,000. If I were to the receipt is $800. Again, my deemed proceeds would be $1,000 because you're deemed to have a minimum of $1,000 of cost and proceeds. Okay. Why is this an advantage? Some people have collections of art, pieces of art that may have a collection of 1,000 items of glassware or different things that are, each one could have a value of $500 and cost less, but just because you're deemed to have that $1,000 minimum cost and proceeds, you can get out of a lot of capital gains when you have a series of things. So that's, we've done that before. Received a donation of about 36 prints, and the value of the prints were about $36,000 altogether, but each one then got a deemed cost of $1,000, and therefore there wasn't a capital gain. So that's just a little thing. The other thing is Quebec is slightly different for those of you in Quebec, and smarter really, because when they say you're donating art to an institution, and we're not talking about art used in the institution, right? It'll be sold. The receipt that Quebec says that you'll use for Quebec tax purposes is actually the selling price that the charity or the proceeds it receives. And that's a little bit different, right? So it's not about your valuation. That's for federal purposes, but for Quebec purposes, it's the money you get for proceeds. And when I saw this, it's sort of weird, but it sort of fit in with my history. I found art to be a very difficult thing. I was early in my career. I was accepting numbers of pieces of art that people were giving, and they get valuations from their people, and I get it, and I'd send it over to the auction house. And it wasn't that I didn't get the valuation price; I got no bids at all, and it would come back. And you realize that it's not the valuations are really not good. And at a certain point, I stopped receiving those kinds of art at all. Obviously, if it's a big piece of art that's known and has true value, that's another issue. But I have found this part of the business to be a little murky, and with our donations. So that's my personal experience with it. Okay. Now, we just talked about having a capital gain and a receipt, and the only little point to add for that is that the new alternative minimum tax rules, which are not yet in legislation, it's still in discussion. But what's proposed is that capital gains gets hit for a higher AMT. Donations now are a negative thing for alternative minimum tax. There is a bigger exemption, so a lot of people aren't covered by this. But if you have a large enough gain from a disposition of land or a gift of land or art, if the art is $5 million and you have a gain of $4 million, $2 million taxable, and you have a receipt of $5 million, starting in 2024, if the rules come in as threatened, there'd be an alternative minimum tax problem, additional tax happening through all the alternative minimum tax. So just we have to be aware of that. Okay, so let's move on to the fun stuff. And so here we have, as I said, there are two special treatments for art and ecological land. So one is called Canadian cultural property, okay, and the other is sensitive ecological land. Sensitive, I've got feelings. I don't think that's the point. I think it's about land that we want to hold in Canada and not and maybe sensitive because of the nature of the land. Development would ruin the ecostructure in the area, and other reasons like that. So we have these special incentives to donate these things. So what's Canadian cultural property? Canadian cultural property, let's assume, is art that Canada says, hey, this is we want to keep it in Canada. We don't want it to be sold off and leave Canada. It's not necessarily just paintings. It could be other cultural property. It's not necessarily Canadian art. First, you look at this and you thought, okay, it's about Canadian art. Let's keep our Canadian art in Canada. But it can be any important art from anywhere. And what happens is that there's a board in Ottawa, Canadian Cultural Property Export Review Board, okay, who receives an application about a piece of culture, a piece of art, and says, we want to keep this. We want this donation to happen. Usually, let's say a museum will do this, and they will certify that it is Canadian cultural property. They will also certify the value, which is important. Okay, and so one has a hard value that's there, and one has a certification that we're going to see with the tax results are really good. For sensitive ecological land, it's the Minister of the Environment. It's the same process. An application is made to the Minister of the Environment with all the facts about the land, why it's sensitive ecological land, and with valuations. And then the Minister of the Environment will certify that it is sensitive ecological land. The gift of land is a sensitive ecological land, and will certify the valuation. And I just repeat that for Canadian cultural property, it's not just paintings and art. For example, and I just use that example here, a Gutenberg Bible, which of course would be an amazing acquisition for a library, right? What I would guess would be Canadian cultural property. One would go to the board in Ottawa and say, we have this Bible, this is the valuation, and that would be a great thing for Canada to keep. And so it could be that. So we can look at this in various ways. I remember looking at someone had a collection of Holocaust items, and would that be Canadian cultural property giving to a Holocaust museum? I'd say yes, it probably would be if it's important and real. So you can go outside of this of the paintings type of view here for different kinds of collections and other cultural property. Now, why is this so important? Is because of the tax effects of on this. So looking at the tax results now for this, let's look at, okay, we see some amazing tax results. So first of all, the values ascertained, it's a full receipt, right? And so if the painting's $10 million, that's a full receipt. You have a receipt for $10 million, okay? And the first thing that's great about this is that if you have a $10 million receipt, you can use it on your tax return against all your income. Now, we know we already have a great system that allows you to use charity receipts against 75% of income. That's a very high number. A few decades ago, it was only 20% of income. Now it's 75% of income, and has been for a long time. Here, you can do it against all income, 100% of income. So that's a positive. You may not want to use it against 100% of income because you don't pay tax on your first 20,000 of income. You have your personal credits and other things. You may not want to use it against all your income, but you want to sort of bring your tax down as fast as you can, and this does it. And then the carry forward is normal for the cultural property, 5 years, but for land, it's 10 years. So you can look and say, oh, I first have no gain. No gain. That capital gain we talked about, gone. Okay, that's the big one. Okay, so first I have no gain. I'm bringing the $10 million receipt onto my tax return. I have no gain. So all I'm looking at is my income that I have from other sources. And I say, oh, that's a big receipt. I can't use it all up in 1 year, but I have 10 years for land to use it. 1 plus 10, actually, it's 11 years. The year of gift plus a 10-year carry forward. So, and that's really an amazing result and very positive. And one can do a little planning if you have such receipts, whether it's for Canadian cultural property or not, to say, how do I bring in income to use it very positively? So this is the fantastic result of this. So what happens here? It's not that the donor usually puts this together. You're going to the Museum of Fine Arts and you're saying, or they're coming to you, we'd like you to donate this art. Okay, they will be ascertained as able to receive Canadian cultural property. They will take care of the application of going to Ottawa with the application with all the details. It's given. You're donating the art to the museum. It's there. And we move on. You get the receipt and terrific tax treatment. So let's now finish this by looking at an estate plan, which I think has happened in Canada around donations of this kind. Because once you get a big receipt, then the question is, how do you use it? It could be wasted. Again, you have 5 years and 10 years carry forward. That's good. But if the receipts are very large, how can you use it? So here's, I believe, has been a situation in Canada. Someone owns a real estate company. And the value of the real estate company, the shares of the real estate company is $50 million, cost $1,000 to set up the company. Forget that. So let's say $50 million of value sitting with, and without any cost. Okay. Also, the person has a painting worth $20 million and cost $200,000. Bought it 30 years ago, and paintings have exploded in value, and actually like real estate as well, but has exploded in value. Okay, so you've got this estate, and forgetting gifts, right? You have two assets. You're deemed to pass away when you pass away. Second death of the couple, you're passing away. You're deemed to dispose of your assets at fair market value. So, assuming the owner of this is a woman and no husband, and passes away, deemed to dispose of her real estate company for $50 million, would have it perhaps a $25 million capital gain, deemed to dispose of the art for $20 million, has a $200,000 cost base, so there's a gain of $19,800,000, taxable in half, $9.9 million, and you pay your tax, and that's good. Okay, so here I'm saying we have this art, and we're going to donate that art to the museum. Okay, and when we go and we get the proper certifications and evaluations and everything, and we will have a $20 million receipt here in 2023. So now we look at that, and the woman says, well, I've got my children I want to give my property to, my real estate company to. So what can I do with that? So I'm going to take the shares of my company, and there's a few ways of doing it. This is one way. And I'm going to roll them. I'm going to sell them into another company, to a holding company. And I'm going to do it pursuant to a section of the Income Tax Act called Section 85. And what that does is allows you to do a tax-free rollover into a company of assets. So I do this. I transfer in my shares. I take back preferred shares of the holding company. Okay, holding company, the children would have the common shares. I'm taking back preferred shares of $50 million, right? My shares are worth $50 million. I'm taking back $50 million of preferred shares. Okay. And typically Section 85 is used to roll over at cost base. So you would roll over the shares at your cost base, $1,000, take back preferred shares, which now have a cost base of $1,000. But here, because we have this receipt of $20 million, we're actually going to, of $20 million, we're actually going to roll it over, but not elect at cost base. We're going to elect at $40 million. In other words, we're going to say the disposition for tax purposes happens at $40 million. Here, this value is $50 million. And so therefore, my preferred shares that I take back will now have a cost base of $40 million. Okay. So what happens for tax purposes? So you're showing the gain on your tax return. You're doing a rollover at $40 million. So your proceeds are 40 million, cost base is zero. You have a $20 million capital gain. You're showing on your tax return. And then you have your $20 million receipt, which can you use against all your income, all of that $20 million, and wiping out the tax on that capital gain. Now, for estate purposes, you now own preferred shares worth 50 million with a cost base of 40 million. When you pass away and the 50 million of preferred shares goes to the children, now you're deemed to dispose of it for 50 million, but you have a cost base of 40 million. You have a capital gain of 10 million, 5 million taxable, 2.5 million of tax. So you're looking at your entire estate and you're saying, I've got this piece of art. Let me see if I can pass on my assets as much as possible without tax and do this. So this has worked very well. And again, if you've got that big receipt for ecological land or art, you can twin it with some estate planning, this plan or other plans to have long-term results. And that's what people sometimes do at a certain age. And, they're sitting with a country house with loads and loads of land around it, and it's ecological sensitive land. And they say, hey, the land's worth a lot of money, but why don't I donate it? I'm not doing anything with it anyway. And that way, it's ecological sensitive land. No one can develop it. Great idea. That way, it's protected for Canada. And my country house now has ecologically sensitive land next to it, not developed, so it's not owned by me. But I get a big receipt, and I can use it for estate planning purposes. So this is a way of doing it. Unfortunately, as I mentioned before, this AMT rules is that that may the new rules with the capital gains and everything may offer some new alternative minimum tax issues to this kind of planning and all kind of planning in which there are capital gains and donations, and that's why these new AMT rules are a little difficult. And we hope that they will be changed by next year. So that's really our discussion on art and land. It's not the biggest subject of donations, but it can be very important with quite a bit of receipt and value for Canada, because we're protecting land and we're putting great pieces of art into museums and libraries and other things like that. So thank you very much. Look forward to seeing you at future seminars.